Hello, good morning, dear friends. I am Professor Khanolkar. This is another video, another PPT you can say, in which I am briefly explaining you the structure of Indian financial market. Now, Indian financial system. What is Indian financial system? Indian financial system is a overall financial system, that is the system wherein the money flows within the country. It is a system how the money flows within the country, and this system, Indian financial system, is broadly divided into four components. You can say first is the financial market, second is the financial institution, third is the financial instruments, and fourth is the financial services. One by one we will discuss. We will just brief on to understand the meaning of each one of it. Okay. So now first one, that is a financial market. So what do you understand by market first? Market is a place where the things are being bought and sold. It is a place where the things are being bought and sold. Now financial market is a place where the finance is bought and sold. Now this finance means what? What is finance? Finance is money. Money when it is required, when it is available with you, you can say it is my available finance. So this we have discussed this also in the offline classes. What is financial market? So this financial market is divided into four types. That is, first is the capital market, second is the money market. So what is capital market and what is money market? What is the difference between the two? We will discuss it in detail later on. In brief, I will just tell you. Capital market helps in raising the capital, whereas money market helps in circulation of money. Raising the capital, that means the capital arrangement is being made, capital market, the arrangement of capital is being made, say by the corporate sector. How? By issuing equities and debts, debentures, etc. So now this capital market is further divided into two markets. Those are, first is the equity market and second is the debt market. Equity market, as you all know, the shares of the companies are being dealt with on the equity capital, equity market. So what is this equity market? Also we will discuss this in the detail further. This equity market functions through what is called as stock exchange. What is stock exchange? Stock exchange is a place where the stocks means securities, are being bought and sold. Then what is debt market? Second part of capital market is a debt market. Debt market is a market where the debts are being bought and sold. Debts, you know, all debentures, bonds, etc. they come under the category of debts. They are being bought and sold under the debt market. So capital market is divided this way into equity market and debt market. Further we will discuss it in detail. Now what is money market? Now I'll just tell you, as I have told you, money market is nothing but money market deals in circulation of money within the country. How the money within the country is being circulated, by what ways, by what instruments, and all those things we have to study in the money market. See, okay, so this money market is further divided into, this money market instruments are there. So which, the very important question being asked frequently, which are the instruments of money market? For 15 marks, this question being severally asked. And for this detailed video, I will be just shortly, I will be giving you a detailed video on these instruments in the money market. Now come to the financial institutions. What do you understand by financial institutions? Second part of the Indian financial system. Financial institution covers all those financial institutions, means all those institutions which deal in money and securities. So securities are, they are converted into money. You see, securities, when you sell it and convert it into money by the purchase price of the securities, your money inflow. So financial institutions are there. These institutions, for example, I am giving, all the banks are the financial institution. All the banks and the financial institutions, you say, they come under the category. Those they deal in accepting deposits and lending money, as well as helping to uh, effectively circulate money in the financial markets. Okay. Now coming to the financial instruments. What do you understand by financial instruments? Briefly, I am just covering it up. Financial instruments means all those instruments which carry some value. This value is measured in terms of money. So these financial instruments are, you can say that is a fixed deposit receipt is a financial instrument. Similarly, a debenture certificate is a fixed financial instrument. Similarly, a share certificate also is a financial instrument, because when you sell that shares in the market, you can convert that shares into money. So all those instruments which you can sell in the market and convert it into money, they are also called as financial instruments. For example, stocks are the name given for the securities listed in the stock market. Stocks, these stocks, if you sell, means these shares if you sell, you get money back. So you can convert those stocks into money, and therefore this is a financial instrument. Now let us quickly come to the fourth one, that is the financial services. Now what do you understand by the financial services? All those services, like banking services or the financial servicing, then capital market services. Then there are various forms of capital market which we will deal in afterwards. Then all those transactions which are being done, which are the services being rendered by the financial institutes, all those are the financial services which we will study one by one here in detail later on. Now in this context, I am just covering up a small description on this money market instruments. Money market instruments. Here some are given in the list here in front of money market. You can see in the PPT: treasury bill, call money market, commodity, commercial bills, commercial papers, certificate of deposits, and cash management. Now one by one we'll just see what is this later on. Okay, now coming to the financial market, just can go through this. Any market, that is a place where the buyer and seller participate in the trade for the financial securities and commodities and other items of value, those at the lowest cost. So how lowest cost? The market being controlled and the cost is being made effective, and at the price that reflects supply and demand. So you have already learned what is the supply and demand. If the supply is more, you can get the commodity at a cheaper rate, whereas the demand is more, than the supply, then you have to pay higher price for the same. Okay. The second thing, that is secondly here, the securities includes, what exactly security means? Here also it is given there. Securities includes stocks and bonds and commodities. Now, also commodities means what? Commodities means all those commodities which includes precious metals, like steel, gold, all these are the precious metals, and those are also being termed as securities here in the financial markets. Similarly, agricultural goods like rice, paddy, wheat, etc., they are also the agricultural products being dealt with in the financial markets, in the wholesale financial market, which is also called as a commodity market. Okay. So the next, now functions of this particular market. Now, what this market does, financial markets, what this market does, this reduces the cost of transactions. So a market means by the rules and regulations, those they are there in the market, following which the cost of the transactions are being reduced to a larger extent. Secondly, it also provides a liquidity to the financial assets. So what do you understand by liquidity to the financial assets? Liquidity means conversion of particular into money. So how fast that is being liquidated, or how fast that is being converted into money to the financial assets. Now what is financial asset? Financial assets are those assets which are the securities, say instruments or securities. Securities means again instruments or securities which are in the form of, you can say, share certificate, debenture certificate, debt form, deposit receipt, insurance policy. All these are the financial assets. Okay. So if you sell these financial assets in the financial market, you can realize money for that, and that is called as liquidity of the financial assets. Similarly, third function is financial market facilitates price discovery. So what is this price discovery? Price is where you find, price is you find in the financial market. See, financial markets are of volatile nature. Volatile means the prices are going up and coming down. That is called as a volatility. They are not stable all the time. Prices are not stable all the time because finance itself is characterized by a volatile nature. And this is and the price determination or the discovery of the price is being made on the basis of the financial markets. Similarly, the fourth one, now the most important function of the financial markets are mobilization of savings and their channelization into a more productive uses. So what is this? This is nothing but mobilization of savings, and this saved money or saved funds are being utilized for the development of our country, that is for channelizing them into more productive uses. Okay, so now the next is money market. Just I over the briefly what this money market is. As the money becomes a commodity. What is this? Money becomes a commodity means you can buy gold. So money becomes commodity in form of gold. Money becomes commodity, and similarly you can sell the gold and realize money. So this is a security. Okay, gold is also a security. So thus commodity also is a security. As the money becomes a commodity and the money market becomes competent of the financial markets, market become a competent of component of the financial market. See, okay. Of course, money market also is a most important. It's one of the four components of the financial market. Second point here, the money market is the market for the financial assets that are close substitutes for the money. So this is another point wherein you can convert the security into money and money into security as and when you require using money market. Using the place that is a money market. Using money market, you can convert your securities into money into securities. And the third function, that is the financial money market is a market for the overnight to short-term funds and instruments having a maturity period of 1 or less than 1 year. So what is this? Short-term market. Now see, money market is what? All those securities are being dealt with in the money market. They are not of beyond 1 year. They are not of the period beyond 1 year. So what it is given here, it is all the instruments and securities having a maturity period of 1 year or less than that, and these are being dealt in the money market. So money market is a place for the short term funds. Next, functions of money market. Now what are the functions of money market? What it does? It financing trade. Any trade or industry, the money market makes money market is very important to finance it. Now second is the financing industry. The overall industrial growth in the country is depending upon the finance, availability of the finance to the industry, supply of finance to the industry, and it is being looked off by the money market. Money market is financing the industrial structure in our country totally. Similarly, profitable investments. So all these profitable investment means when you get money, you have to invest the money to multiply your money, to double your money or triple your money. So what is this? Profitable investment you can do. That is, when investment means you can invest the money in various securities and bonds and real estate and other things, and this can be done with the use of money market. For this, finance is being provided by the money market. Thirdly, money market is a market for overnight and short-term funds that we have already discussed. So it is a short-term funds, so profitable investments and self-sufficiency in the fourth point is the self-sufficiency of commercial bank. Now what is the self-sufficiency of commercial bank? Money market particularly helps in making the banks self-sufficient. Okay, so this money market plays a very important role wherein it guides, wherein this role is being played with the collaboration with RBI, mainly the father of banking sector, I can say, that is the Reserve Bank of India, which looks after all the banking sector, which controls all the banking sector in our country. Anyone wants to do any business of banking or finance has to take the registration or permission from the Reserve Bank and has to register himself with the Reserve Bank for accepting deposits and lending money. That is the banking business. And self-sufficiency of commercial banks is totally based on this money market functions. Now, the instruments of money market. Instruments. So, which are those instruments which are being used in the money market? Money market, as you all learned, all of you learned that money market is a market for the short period, or you can say short-term funds being arranged in the money market. And now these short-term funds or short-term money, they are being arranged by various instruments, and these instruments are very important. All the time, many of the times this question is being asked for 15 marks. Now just you can have the overlook. Most important of those I have given you 6 instruments I have given you. That is, the first is a treasury bill. They are the government treasury bill. Second is a call money market, that is money at call and short notice, also it is called as. Thirdly, it is a commercial bills. Fourthly, it is commercial papers. Fifth, it is certificate of deposits. And sixth is the cash management bill. Apart from these 6, there are still some more instruments which are there. There are around 15 to 20 instruments, list of which I am going to give you in the next session and explain those in detail, because a 15 marks question is being asked all the time in this on these particular instruments of money market. Thank you for today. So please attend my second video. Thank you very much.